So hey there, it's Ryan Haley with Atlantic Shores Sotheby's International Realty, and today, which is Friday, I wanted to reach out to some folks here and kind of allow our clients to have a snapshot as to the state of financing right now. The other day, I gave everybody an update as to the fact that there's still activity here at the beach with regard to real estate, and I kind of went over some of the essential services or the services that we're offering right now, a lot of which is being done virtually. But what I thought would be helpful would be just to try to get a snapshot as to the state of financing and mortgages right now. So I'm pleased to introduce all of our clients to Justin Kozera here, who is the local branch manager for Movement Mortgage and somebody we've worked with for years. So I'm excited to have Justin with us. Thank you, Justin.
Yeah, thanks for having me.
Yeah, no. Thank you for taking the time to meet with us and give us a little bit of an update. So, what are you seeing here recently with regard to financing? I know some buyers might be a little confused because they heard that the Fed was going to be purchasing the mortgage-backed securities and that rates were going to be coming down. Maybe you can start with that. If we just look at our typical primary housing and vacation home financing, what are we seeing with regard to rates?
Yeah, so definitely in the last month, rates have been kind of on a roller coaster ride. Just with the stock market, usually rates, the bond market hinges off the stock market. So there's a lot of turmoil and volatility going on right now. What we do in our job is to watch the market every day. About 2.5 weeks ago, rates kind of hit all-time low. They were down, for a conventional loan, you're talking about 3.125 range with good credit. So those were really, really low. And kind of what happened is all the lenders and everyone kind of hopped on that. There was a lot of refis coming in as well. So it did saturate that market almost, which made bonds actually push up because there was such a high demand for it, but really not enough supply, which almost pushed rates up higher because there wasn't enough margin. But now, since the Feds have tried to control that by purchasing mortgage-backed securities a little bit more and more every day. Actually, in the last 2 weeks, they purchased over $250 million in mortgage-backed securities, trying to control rates and keep rates low. Rates are still in the threes, and they have some potential of still going back down into those low threes. You're talking around 3.5% right now, with room to go down more. So it's still a great time to buy. Most of these, I guess a year ago we were talking, 4.5 to almost 5 was normal at this point in time. So rates are great right now. Your buying power is coming at an all-time high.
Yeah, so you can buy a little bit more house for less money, possibly. Okay, so with regard to like I mentioned, the primary residence and vacation homes, what are you seeing as far as guidelines and minimum amount down requirements right now? Has there been any changes there?
With regards to how much to put down, no. And I'll just hit on that real fast. A first-time home buyer can put conventional down as little as 3%, and then your standard first-time or regular home buyer purchasing a primary for conventional loans 5%, and then a second beach home you can put as little as 10% down. So those haven't changed. They haven't made any more requirements, putting more money down at all yet. I don't think they're going to change that, but just depending how long things do drag out, those do change. Really what they've been tightening on is verifications of employment. Actually checking that the borrower is working, that they're not furloughed. And then the big thing is self-employed borrowers as well, to where they're making sure that the state that you are currently in, that your business is deemed essential. And if it is deemed non-essential, how you're now conducting business with these new times, and if you're still able to operate and bring in revenue and still work from home. So definitely a lot of changes clearly with everyone with unemployment. In the last 2 weeks, about 15 million more people, are unemployed, filing for unemployment. So that is definitely a big key that all loan programs are really hitting on is verifications of employment.
Got it. And that process is happening all the way up until settlement, I would imagine.
Yeah.
It's one of the last things that you guys are checking, I would imagine.
Mm-hmm. Yep, all the way until the day of settlement that they're calling, and some like the Maryland mortgage, the bond programs have actually all the way till 5 days after settlement to make sure that these borrowers are still employed, that they're getting that far into it. Got
it. So just as kind of a recap, the conventional loan limits, so that this central pocket here, primary housing in secondary homes, fairly stable. Seems like the guidelines really haven't changed that much. Great rates right now. Minimum amount down for somebody on a conventional primary residence, 3%. And then for second homes, vacation homes, you're looking at a minimum 10% down right now.
Yep. Mm-hmm.
Got it. Okay, great. And then what about, so we've heard some chatter that things are, so we just talked about your typical conventional loans, but then as far as some of the government-backed loans, that's where we've been hearing some chatter that we might be having a little bit more difficulty there with getting financing. What are you seeing with your USDA, your FHA, your VAs?
Yeah. So Ginnie is the backer of all government loans, and what we're seeing happening, especially with the big refi kick a couple of weeks ago, and still, people are calling about refinances every day. So it's not slowing down either. But what is happening is that there's such saturation in that they're now pushing their requirements higher to where an FHA loan, you used to be able to go down to a 580 credit score to qualify. They push that now up to a 640. So they're trying to tighten their window of requirements to not only shrink the pool near a conventional loan almost, to make sure that they're putting themselves in a good situation with good borrowers that have great credit scores, and with good debt to incomes that qualify. So that is changing, and there's talks that could even tighten up even more than a 640 credit score. So even up to I know some companies have actually moved all the way up to 680 requirements and or have suspended all government loans that some companies are doing.
So the other option would be, so if they were going to go FHA, what's the minimum requirement down on an FHA loan?
3.5%.
3.5%, but they actually could go conventional with minimum 3% down.
Correct.
But the credit score requirements are different.
Correct. I mean, conventionals, you can still go down to a 640 with conventional loans as well. But they're trying to push. They're almost trying to push people towards a conventional loan. And if they're a first-time home buyer, they could put 3% down and go conventional, and almost be put into the same or better situation and qualify. So there's still plenty of opportunity for those people that might have been told that they can't qualify, or their credit score is too low, that we could definitely help build their credit score up in a short amount of time, a month or two, and definitely get them in a great buying situation.
Got it. Are you seeing any delays? So like with approvals like USDA, and going that route? I mean, are you having any issues with getting those approved, with the fact?
So USDA turn times in Maryland right now are running about 4 business days, which is pretty customary. They're not too backed up because they don't really have a lot of purchases coming in. Where I've been, hearing around the industry where there's a lot of backup is people's own personal underwriting departments. With kind of a lot of companies are experiencing record volume that they can't keep up with everything coming in. I know personally, Movement has hired 100 more staff members to kind of take this on, while also experiencing this from working at home at the same time. It always makes it a
Still have you, Justin?
little bit more difficult, but yeah, was that?
I think I lost you for a second there.
Uh,
We're all fighting for internet right
yeah,
now. The whole world's fighting for
yeah,
internet. So that, you just repeat that last line, the last
yeah.
two lines.
Yeah. So underwriters are working all weekend, just to keep up with the volume. Our processors are, title companies are working on weekends to try to get title work. So really, people are going, around the clock to really try to keep up with all this volume. So yeah, some companies are experiencing some delays, but we're trying to keep up and honor those purchase dates and keep those refis on track and ready to close.
Good. All right, that's great. The last thing I did want to touch on, because we've been hearing some chatter in the real estate world about this, but the jumbo world, jumbo financing and jumbo loans, we've heard that some of the investors are a little shy right now with regard to doing jumbo loans. So I just want to kind of get your take as to where we're at with those. And I guess starting off with, what's the minimum loan amount for a jumbo, or the maximum for conventional?
Yeah, so the maximum conventional loan right now is $510,400. So that is the max borrowing loan amount for a regular conventional loan, not the max purchase price, but the max loan.
Got it.
But yeah, so the jumbo market, all the investors, your big jumbo investors are a lot of these big banks, Chase Wells and so forth, that are the jumbo investors in the market, and we've pretty much seen them all suspend all jumbo programs to really alleviate that burden on them, just because there's like you said, there's so much uncertainty about what's going on. And there's actually been some situations where we've had some borrowers that were looking in that jumbo range, but now they just really don't know what to do. And kind of a way to alleviate that is to do a first and a second mortgage. And essentially what we'd be doing is doing a first mortgage of that, $510,400, and then adding that second mortgage, which is a home equity line, to alleviate that gap between how much they really did. If they only wanted to put that 5% down, to stretch that gap between the max loan amount and that second, so they don't have to come out with $200,000 for a down payment just because they're looking for a $700,000 house. So yeah, there are definitely ways to get around that market being gone, which it won't be gone forever. We could always refinance afterwards, but this paired with a good rate on the regular conventional loan, and with home equity lines being at lows right now, which is with the market the way it is, it definitely puts you still in a very, very good situation.
So then you're kind of looking at a blended rate situation where you've got one rate for the conventional and then an additional rate on the home equity line of credit. How much difference are we seeing there on those rates?
You're talking about, I actually spoke with over at Tower Federal the other day, and they were actually offering a 15-year interest only at 3.99. So actually, a home equity line under 4% right now is definitely crazy to see, considering I remember a year ago, 7%, kind of looking at for a home equity line was pretty normal and adjustable, and seeing that and going up. So it's definitely a good time to take advantage of that as well.
Okay. Well, good. So there's still a lot of options out there. It sounds like from your standpoint, you're still trying to get prioritize the purchase deals and making sure that you're hitting the timelines that you can there as far as settlement dates go. What would you say, so to the buyers who have been looking at or continuing to look, they need to do something here, regardless of the time they're looking for their home. And say they talk to somebody or yourself 30 days ago for a pre-approval letter, what should they do now? I mean, do they need to be contacting you?
Yeah, they definitely stay in contact. Contact right now is the most important thing right now to really keep us updated on not only your employment. If you possibly think you might be furloughed, or a gap in employment, those are things that we need to update right away. To one, make sure you're protected from possibly putting in an offer to where you were pre-approved 2 or 3 weeks ago, but now it's a different situation to where you're under contract and we can't use your spouse's income to qualify. So just really communication is key right now. I mean, we're all working pretty much around the clock. Just because we might not be in the office doesn't mean these home offices aren't going on at all cylinders. So really just keep in contact, and there are definitely ways that we can get you in still on great turn times, and pretty much do everything virtually.
It's a new world with these home offices. It's like,
Right.
it's funny. I talk to certain people, and every day I'm seeing like different backgrounds. Some people put their own background in the Zoom
Yeah.
call, but then also they're trying to go to different rooms depending on the time of day, depending on
Yeah.
the kids and everybody else in the household and dogs. And
Yeah.
we could be having a great meeting like this, and then the mailman comes by and the dogs start going crazy. So you just never know
Exactly.
what you're going to get from these home
No,
offices.
no, not at
But we're
all.
all adapting.
Oh yeah. Adapt and overcome.
That's right. All right, Justin. Well, thank you for your time here today. Really appreciate it. Thank you for, I know you're extremely busy and you got a lot of people to talk to, but thanks for giving us a quick update.
Yeah. Thanks for having me.
My pleasure. Thanks so much. We'll see you.
See ya.